Okay, so this is a quick video to take you through the completion of the homework question in your yellow booklet. It's called Hickson Plc, or your cream booklets I should say. If you notice down the side of here, you can see the initials NCA, CL, CA, EQ, NCL, and down there CA. This is just to highlight that these items go on the balance sheet, which I'll be dealing with in the second video. So that means anything that hasn't got an initial on it, you're going to put in the income statement, which is the thing we did in the first week. So if I take you to the income statement, I've filled it in already. It's just to show you, to point out a couple of things. First, at the top of the page, make sure you've always got a heading. So for income statement, it's always for the year ended. And notice here as well, you've got two columns, one on the left, one on the right. Make sure the items that you use, you put them in the correct column. So revenue on the right and inventories on the left. Make sure that when you see a line, you have to do a little subtotal, either adding or taking away. So for example here, we've got opening inventories 25 and purchase of 100, and underneath you can see there's a subtotal of 125. We do this because we need a subtotal of our inventories. We take away the closing inventories. Closing inventories are goods that you haven't sold yet, and we can't include that in our profit calculations. We take it away and bring it over level with this word called cost of sales, which is essentially how much the goods you sold cost you. So for example, if you bought one table and it cost you £5 and you sold that one table, the cost of sales will be £5, essentially how much you bought it for. The first thing we want to work out is gross profit, which is the profit on buying and selling your goods. We sold the goods for 286, we bought them for 76. The difference between the two is called gross profit. Carry on down, we need to show our overheads, and there are only two types. We've got distribution and we have admin. Okay. Again, get those figures from the trial balance, subtotal, because there's a line there, and we bring the total of both of those, add them together, and you get 112,000. Sorry. The next profit we need to work out is profit from operations. So if you look up, you've got your gross profit there. We're going to take away the admin. Leaves us with 98. Finance costs is next. You'll see that on the income statements. If I go back, it's always the loan interest expense, as you can see it there. Okay, get that figure and just put it in there. You need to remember that if you've got to pay interest, it's definitely going to reduce your profits. So you can see there's a line there. We need to take the 12,000 away from the 98, and we're left with 86, which is the profit before tax. Tax, again, you're going to get from the income statement. Let's see if we can find it. And you're looking for the corporation tax expense, because we're doing income statements. You can see that it's 7.5. Get that figure and put it in there. Again, think about if you work and you've got a salary, tax reduces your salary, or here, tax reduces your profits. Take it away. You've got profit after tax of 78,500. Last, what we've got to do is this section called retained earnings. Now if you look at your glossary, retained earnings are all the profits you've made since you started trading. So get this figure, retained earnings from the income statement. Okay, put it in. It's 21,400, and it's this figure. It's always the figure on the trial balance, and it's this one here, retained earnings at the 1st of October, which is the start of the year. Then what we're going to do is add to it the profit for the year, and you've already worked this out. It's basically that figure. Put it in. Then we need a total for all of our profits, which you can see the line there. We're just going to add those two figures together like that. And the last thing we're going to do is, remember, dividends, which is a payment of profits to shareholders, and you're going to get that again from the income statements. If I show you, where is it? There it is, 6,400. Get that figure, put it in there. Now again, remember, if you've got some profits but you have to pay some out, it's going to reduce those profits. So you need to deduct the 6,400 from the 9,900. So your retained earnings at the end of the year is 93,500. That's an important figure, because you'll see in the second video I'm going to do, we have to take that figure and we have to put it in the balance sheet under the heading equity, and you'll see that we always use this figure. Don't make the mistake of using this figure. This is really, really important. So in fact, I'll highlight it yellow.